This is how I would use the RSI and moving averages on my chart in order to generate buy and sell signals. So we have the smooth moving average, which is the moving average loaded up on our charts. As you can see here, these are the two lines. The lower smooth moving average is the blue line, and the longer time frame is the orange line, which you can see on our charts as depicted here. Below that, we have our RSI indicator. And so we're now going to discuss how we can use these two in combination. Now, the theory is that when the 9 EMA crosses above the 18 EMA, it creates a bullish signal. So that is considered to be a buy signal. So once it crossed over, one could enter a long position. When it crosses below, that is also considered to be a sell signal. Now, for the RSI, we have discussed that anything above 60 showcases a bullish market sentiment, and anything below 40 implies a bearish market sentiment, and anything in between implies indecision within the market. So the way to use both of these in conjunction on your trading chart is essentially, if you are anticipating a buy position, you could wait for the 9 smooth moving average crossing above the 18 MA and for the RSI indicator below our chart to register a figure of 60. Now let's see an instance when this was the case. So you can see here for the sell signal, once the 9 moving average crossed below the 18 moving average, you can see that the price action moved lower, and on our RSI indicator, you can see that that was reflected as well as the figure moved towards 40 and even lower. So that was for a sell position. For a buy position, let's see, around here, we saw the 9 moving average crossing above the 18 moving average, and that was reflected in their RSI indicator as well. It was still at 50, so just notice the lines on our chart, and it moved higher to 60, showcasing a bullish momentum. So this is a very simple way as to how one could use moving averages and their RSI indicator on their TradingView chart.